What's going on, guys? So, we have a huge week coming up this week for earnings and economic data that we have to go through. So, let me get myself out of the way. We're going to go through this economic calendar day by day, breaking down the key companies that actually matter. And then we're going to go through the economic calendar day by day also, so that you know everything that you have to know what's going on in the market and how to capitalize and how to make money, because that's what we're all here for. We're here to make some money. All right, so let's start out on Monday over here to see what we got going on. And to be honest with you, there's not really much. We have Waste Management that's going to report, and it's a trash company. It's funny you see all those memes online about it, but if you look at a 5 year chart, the stock has just been ripping in the last 5 years. And you want to know why it's ripping? Well, just look at earnings per share. It was like a dollar a share Q1 of 2021. Now it's up here to $1.67. So it is trending up, little downward trend right here. But overall, as earnings go up, the stock price is probably going to go up too. Now, Monday, which is tomorrow at the time recording this, it's Sunday right now. We did get a trade deal with the European Union where the stock market might go up a little bit, and it's Sunday right now at 4:24 p.m. Pacific time. Right after I record this, I'm going to upload it and post it right away so that you guys will get this info so you know what's going on for next week. Because honestly, this is going to be a really important video if you really want to capitalize and make some money. So the trade deal with the EU is good. You can see there's really nothing going on Monday on the economic calendar. So we're kind of going to leave it at that because it's a calm before the storm. There's a lot of crazy stuff going on Wednesday and Thursday. Tuesday also. So let's just go into Tuesday. SoFi is a big one. A lot of people have a lot of money in SoFi. It's kind of been like the meme-ish bank fintech stock that everybody wants to buy. I am not a buyer of SoFi. I think it's a little bit expensive, trading at 124 price earnings ratio level. I can't buy a bank stock at that valuation. Yes, they're growing like crazy. Yes, their earnings are going up pretty good. You could see it goes from, it's negative in Q4 of 2021. So now it's positive of roughly 6 cents, but it's just really not enough. I mean, yes, the revenue went from 237 million all the way to 770 million, but does it really justify a 124 price earnings ratio level? It's hard for me to justify that, guys. I know you guys like SoFi, but it's just hard for me to justify that right now. PayPal is an important one. I'm not really bullish on PayPal. I think it's kind of like a dying company. I'm not going to be buying PayPal. You guys that are in Discord, you guys know that I have a position on United Health. United Health is a company that, check out this stock price right here, went from, you know, 600 bucks a share to $281 per share. It took a massive, massive nosedive here. This is a case in point example of a company that, in my opinion, a good company, but it's just out of favor. And if you're patient with it, I think that you could do very well in the long term. I'm not saying it's going to go up 50% when they report earnings on Tuesday, but I think if you're patient, there's a good chance you're going to make some money on this stock right here. UPS is a good one. We're going to get a little bit of an insight as to how the economy is doing, how many people are paying for next day air versus ground. Because if you don't have any money, if the consumer's broke, you're not going to pay for next day air. You're just going to pay for UPS ground. Good one there. Visa, this is one that's going to show us the state of the economy, how much money people are spending, credit card balances, and credit card defaults, which in my opinion is a very good, indicator of how the economy is actually doing and if people have money to blow. And that kind of rolls into Starbucks because Starbucks is like that premium coffee brand where it's like Starbucks probably charges what, like double the price of Dunkin' Donuts, for example, for a similar size coffee. And yeah, you guys are probably going to argue that Starbucks is way better, blah, blah, blah. I get it. But there's more room for Dunkin' to go up than Starbucks, in my opinion, because Dunkin' could just raise the prices by, split the difference between their $2 coffee and Starbucks' $4 coffee. Maybe Dunkin' charges $3 in that example, but Starbucks doesn't really have much more room to raise prices of coffee, in my opinion. So a company that's trading at a 33 price earnings ratio level, and if we go over to the revenue's been kind of flat. Earnings per share is actually declining. I am not a buyer of Starbucks at these levels right here. Now, heading over to the economic calendar for Tuesday, there's a couple important things, but it's really not big until Wednesday. So the key thing that I'm looking at on Tuesday is going to be consumer confidence, which really it matters, but it doesn't really matter that much. And the reason why I care about it a little bit is because, when consumer confidence is high, that means that people are happy. They're euphoric. The stock market's going up. The economy is doing better. Maybe we're not having all these trade tariffs and stuff going on. Maybe we're making trade deals, which we just did on the European Union. So consumer confidence is going to go up, but that doesn't necessarily mean that's a good time to buy stocks. I like to buy stocks when consumer confidence is actually low. And then the next one is going to be job openings, which, job openings has been trending down year over year over year for the last few years. And maybe it's because the economy is not doing so well, but I really think that it's because companies are doing well, but they're seeing that, it's a cliche thing to say, and I get it, But AI is becoming so important and so helpful to these companies. So it's like if 100 people get laid off or they quit or they get fired, whatever it may be, maybe they're only going to backfill 50 of those positions. So 100 people out, 50 people in, because AI is doing the job of a lot of those people for them, where it's just making people a lot more efficient. So, key thing to look at right there, and it's an important trend that I want to track as the years go on for the job openings and, of course, the unemployment rate too. So, Tuesday wrapped up right there. Now, let's go into Wednesday because this is where things get pretty heated up. So, pre market Wednesday, there's not a lot of crazy things going on, but if we go to after the close on Wednesday, things get pretty hot. We have Microsoft, we have Meta, we have Robinhood, we have Qualcomm, we have ARM. But in my opinion, the most important are going to be Microsoft, Meta, and Robinhood. So, number one, we'll start out on Microsoft. So, everybody in here knows what Microsoft does. And to be honest with you, I know you're sick of me saying this, but there is a lot of companies that are a little bit expensive right now. And Microsoft up here to 39.7 price earnings ratio level. It is a little bit hot for me. And if we just look at the revenue, yes, the revenue is growing very, very well. But if we go to Q3 of 2025, it's at 70 billion, and then we go to Q3 of 2024, it's at 61 billion. I mean, from 61 to 70, that's good growth, but it's not amazing growth. What is that, like 15% revenue growth year over year? And if we go to earnings, yes, it was at 347 a share, but then if we go to the same quarter before, it's at 294. So yes, great growth from 294 a share going all the way up to 346 per share. But is that enough growth to justify a PE ratio level of 39.7, which just say it's 40? In my opinion, it's hard to justify that. But if we go to a company like Meta, for example, look at Meta's PE ratio at 27.8. So Q1 of 2025 was $6.43. But go back to Q1 of 2024, $4.71. So 471 to 643. Don't you see how much more growth on earnings Meta is giving you versus what Microsoft is giving you? And it's at a lower price earnings ratio level. So again, Meta is a little bit more compelling than Microsoft, in my opinion, just on a fundamental standpoint like that. And of course, there's a lot of other things that I want to look at for Meta, such as how much money they're spending on CapEx, how their CapEx guide is going to be, how much are they spending on AI data centers, are they going to design their own chip, what are they going to do with robotics, how's the ad platform? There's a lot going on unpackaged with Meta. And I do have some exposure to Meta, so I will be doing a detailed breakdown in Discord for really any of these companies that I'm highlighting right now. I break all these companies down in my Discord. It's free below if you want to get in. So Meta is going to be an important one. Robinhood, of course, is the hot stock that a lot of people are talking about. I mean, look at this chart on a 5-year basis. Coming out of 2024, $10 a share. Now it's at $100 a share. So we pulled a 10x on Robinhood in the last couple years, which is insanity. But what did the earnings per share do? Well, you could probably guess the earnings per share, they went from negative to now they're positive. But when you go and divide from a negative number to a positive number, it really skews everything. So I like to just look at revenue. And you could guess why the revenue is so high in the most recent quarters. And that's because the price of Bitcoin's been going up. So they're getting more transactional volume. They're making more money on the bid ask spreads in Robinhood. And on top of that, the stock market's been ripping and there's been a lot of volatility. And honestly, I'm not a big Robinhood guy. I don't really use Robinhood for my own investing, but they do have the best user interface. I'm going to admit it. I think it's the best. But that doesn't mean you're going to make the most amount of money with Robinhood. I think that Charles Schwab does a lot of things better with regards to how I could use my base portfolio's collateral to sell put options, for example, instead of doing cash secured puts. There's a lot of stuff that we could talk about that. I'm not really going to talk about that in this video, but I'll link below and at the end of this video, the video where I explain and show you inside my $1 million account of how I do all that stuff with stock options, how I make a lot of money doing that. Check it out if you want to check it out. But again, Robinhood's good. I love the company, but at an 81 price earnings ratio level, I'm probably not a buyer. I think if you wanted to buy this, the move has probably already been made. But if you were to tell me, hey, Brandon, I want to buy Robinhood and I want to hold it for 10 years, I'll be like, you'll probably be fine on a 10-year basis, but it's hard for me to justify buying it up here at this expensive level. Now, if we go to the economic calendar for Wednesday, this is where things get really interesting. ADP employment data will be big, gross domestic product will be big, and take a look at, so this column right here is the median forecast. The median forecast for GDP is 2.3%. So where's everybody at that was completely freaking out having a meltdown, like when the market was dipping in April? Remember, the chance of a recession was priced in to be like 75%. But to technically have a recession, that's 2 quarters of negative GDP growth back to back. Q1 was barely negative, and Q2 is not even close to being projected as negative. So everybody that was hoping for a recession, unfortunately, you're not going to get it. At least you're not going to get it right now. And you can see that Q1 was 0.5% negative. Again, nothing there. And it's really all just because all the imports were being front loaded to front run tariffs. So at the end of that equation on how to calculate GDP, it's exports minus imports. And because we had so much more imports to front run the tariffs, that skewed the number negative. So if it wasn't for that, this number would have been positive too. So here's the interesting part. The Federal Reserve is going to drop their interest rate decision, which is pretty much priced in to have no interest rate cut. And then Jerome Powell's going to talk 30 minutes later. Now, here's the key thing with Jerome Powell. He said at the last press conference that June and July was going to be the months that if we get inflation, it's going to be resulted in those CPI reports for June and July. We did get the June CPI report. It came in a tiny bit hot, but not super hot. And now that it being the end of July, Jerome Powell probably already has that information, so he kind of already knows how it's going to be. So we're going to get key clues from Jerome Powell basically explaining, is inflation coming back or is it not? Is it transitory? Is it not? Because if inflation is showing signs of not really coming back too high, because he was saying that the tariff inflation was going to be priced in, the prices were going to go up in June and July. But if they don't go up, he's probably going to cut. And I'm very curious if anybody in the audience is going to ask Jerome Powell about his encounter with Trump at the Federal Reserve building. It was pretty funny. If you haven't watched it, go watch the video. It'll make you laugh pretty hard. I'm not going to put it in this one, but it'll make you laugh how Trump is talking about, oh yeah, you're going over on your budget renovations or whatever it is. And Jerome Powell's like, I don't know anything about that. And Trump just miraculously pulls a paper out of his pocket and is like, oh yeah, look, it's right here. And Jerome Powell's like, no, dude, this doesn't have anything to do with it. There's an extra building on here that was built years ago or whatever it was. So I don't know. It was funny to check out. So Wednesday is going to be big because interest rates are gravity. You guys know I talk about this a bazillion times. So definitely something to watch for Wednesday right there. Now, rolling into Thursday, MasterCard. MasterCard is going to be a similar thing that we're looking for versus Visa. We're going to be looking for the state of the economy, delinquencies and stuff like that. But MasterCard being at roughly a 40 price earnings ratio level, when the earnings and revenue, so this is revenue, is not really growing too much and earnings are growing good, but just look at it on the perspective of, Q1 is 373. If we go to Q1 over here, it's 331. So it's not as much as what it looks right here. You got to understand this is like 4 years of data. So it's not enough to justify that valuation level. So I am not a buyer of MasterCard at these prices. But the big dogs start to roll in after hours on Thursday. We have Amazon, Apple, Coinbase, and MicroStrategy. So let me break these down super quick. So Amazon is a very good company to get an idea of how the economy is doing, and more importantly, how inflation is doing, because I'm curious as to how much Amazon really raised their prices on certain imports from China, for example. Because if they raise their prices a lot, we're going to know about that, and that could potentially be inflationary. So it's going to help us out on that front. It's going to also help us out on the front of, do people actually have money to go blow it? How is Prime Day? How is just any day in general in the business? Because a lot of spending on Amazon is discretionary, meaning you don't have to spend that money. So when you don't have to spend that money, if you don't have the money and you don't have to spend it, you're not going to spend it. So if Amazon does good, it means the economy is probably doing good too. So hopefully you kind of made that connection right there, because there's a lot of non-needed spending on Amazon, like buying stupid stuff. Apple's another good one that we're going to go through. Apple, honestly, like iPhone growth isn't really there. Overall growth isn't really there. I mean, look at revenue. Like their revenue has been flat for 4 years. So Apple, in my opinion, trading at a 30 for a price earnings ratio level is too much, and I'm not a buyer of the stock at that level. I think that they need to do something to innovate. Otherwise, maybe eventually some company will come along and take them off their spot, just like Apple did to BlackBerry. Nobody would have thought that BlackBerry would have been wiped off, but Apple did it. And there could be a company that wipes Apple off too. So maybe Apple will come out with a phone that folds or something like that, and that'll help them out. But again, I don't know. Apple needs to do something, in my opinion. Now, Coinbase is a good one. So if we just look at the share price of Coinbase, it's been going to the moon. 2023 at the bottom, it was like 34 bucks a share, and now it's 390. So freaking 10x in the last couple of years, which is insane. But let me ask you this. Why is Coinbase going up in price? Probably because Bitcoin's going up in price, probably because there's a lot of transactional volume. More volume equals more fees. But what happens if the price of Bitcoin goes down? Which I know a lot of people are like, it's not going to go down. But promise you, it will go down eventually. Everything corrects from time to time. So if Bitcoin goes down, Robinhood volumes are probably going to go down, and Coinbase's volumes are probably going to go down too. And when that happens, what do you think that's going to do to earnings per share? Earnings per share, they're still growing kind of good, but are they growing good enough to justify a 55 for a PE ratio level when it's kind of going to be like a business where Robinhood comes in and does free trading for crypto? Like Coinbase still charges fees for trading crypto. So imagine what happens when all these people just realize, why don't I just go to Robinhood and do it for free? Why am I paying Coinbase a fee? And Coinbase is either going to have to drop their fees to nothing, to compete with Robinhood and the other platforms, or they could potentially get crushed. So if we sit back and say, look, do we know what the price of Bitcoin is going to do in the next year? Nobody on earth knows. Maybe it goes up, maybe it goes down. So if we don't know what the price of Bitcoin is going to do, that means we don't know what Coinbase's earnings are going to do. And if we don't know what Coinbase's earnings are going to do, why are we going to buy the stock? Because the number one thing that matters for a price of a stock in the long run, if it goes up or down, is what the earnings per share does. If earnings go up, the stock is going to go up, usually proportionate to that. But if earnings per share goes down, the stock is probably going to go down too. So if Bitcoin takes a complete crap and just goes down, or Michael Saylor says he's going to sell, which, geez, that would be insane if he does, you'll see Coinbase fall like a rock. So we'll see what happens with that. And then that kind of rolls straight into MicroStrategy, which is now Strategy now. So the whole business model of Strategy is this. So MicroStrategy in a nutshell is a data analytics company that doesn't really make any money in general. What they do is they write bonds to get money up front to go buy Bitcoin, put it on their balance sheet, and then they just hope that Bitcoin goes up in price. If Bitcoin goes up in price, it's going to keep working for them to keep issuing bonds or issuing more shares to raise money to buy more Bitcoin. But if Bitcoin goes down, MicroStrategy is going to get vaporized. So, yes, you can make a crap ton of money on the upside. Like in a 1 year chart, you could see it's up 140%. But if you understand what Bitcoin can do, where Bitcoin has fell 80% multiple times, if Bitcoin were to fall 80%, MicroStrategy is going to be vaporized. They're going to be dissolved. They're going to be non existent, most likely. Let's go to Thursday here on the economic calendar and see what we got going on. So, initial jobless claims are big, and it's also going to be wrapped up with continued jobless claims. Initial just says how many people lost their job and they filed for unemployment the first week. And continued is how many people filed for unemployment on a continued basis more than 1 week. So that'll give us a clue into how hard it is for people to find a job. And another good one to look at is the PCE index, which is just another way to track inflation. And the Fed loves to look at this one right here. So that'll give us more clues into inflation. And then we'll just go into Friday real quick. We have the jobs report, which is going to be humongous, and consumer sentiment, which again, I talked about it above. It's not that important, but it does matter a little bit. And then if we roll into Friday right here, you can see there's not really much going on. So I'm going to send out these videos every single Sunday towards the evening to help you guys prepare for the week upcoming. Again, if you want to watch that video, how I do stock options, click the link above here, click the link below. It's going to help you guys out a lot. And I'll see you guys in the next video.